Welcome to TradeTheMBI.com. This is Jones Reports for the 30th. Well, as we were talking about magenta leading MBI, we had the rising red still. Even though shorts had activated here on the DOC slightly, we really weren't seeing it from a MBI view. And my expectation was that bulls really were just going to continue to squeeze, and that's what they did, and drove above 50% here. That 4008 became pretty critical from a support standpoint. And when we saw shorts fading off, it seemed to me that that's where the benefit was going to be. And of course, we were looking for the NASDAQ to be the leader in the move. And it hadn't even gotten close to the negativity that was expressed from the S&P. And we saw that because the very short move here of the MBI white to negative, what was that? Negative 1.7. So getting down there into the zero for short level really just didn't provide enough say impetus to drive things down. And with the bond trade having gotten so crowded, really left a great opportunity there and pushing it right back up to the highs. So now the question is breakout, and it's poised for a significant one, at least from the NASDAQ standpoint. And then obviously the carry through would help the S&P. And again, there's still too much traffic into Treasuries keeping yields suppressed, and that's just an indication that they think that the Fed is going to have to step in. And if they're wrong, then it's going to be expensive, because as rates would continue to rise, and they will be in a short yield versus where things are headed, and that wouldn't be good. So everyone thinks that we've reached peak rate at this particular stage. And that may be optimistic, particularly if oil continues its climb, because any move back above 80 for oil is going to continue the cycle of inflationary pressures. So, and obviously the job market really becomes a secondary one. As long as it remains tight, you have wage pressure, and that really becomes the critical element. Wage pressure and oil, two huge factors in what drive inflation, always has been. Gold still going to continue its rise. It's just going to have pauses and fits, less than think dynamic changes. There's still a huge demand for precious metals. The euro on its tear, no question about that. They're going to continue to pump that until the next series of EU negative situations appear, and then it'll be like, oh, who knew? Bitcoin still pushing up to new highs, already up to the 28K. We expected that, even remember from way back down when we hit these lows. We could see the accumulation that was during the whole Bankman-Fried crisis, and once that leveled out, crypto became an opportune space to jump back into, simply because it kind of weeded out all the weak hands. So here we are. Bitcoin again outperforming, as I suggested that it would continue to do so. It just happens to be the more stable of all of them, really, and I think it's going to always attract the bigger attention. At least in the near term, nobody else has come up with the powerful enough replacement. ETH, yes, is used a lot, so it has some viability, but Bitcoin's still the one. From a 50K standpoint, you can see the buy that we had here at the start of the other day when things turned green, and it has followed that straight through. Fairly straightforward, basically. Same thing with the long here. Once we were above that 92, we came up against but obviously the 4008 range 9 right in there, which is where the daily was. And once you get there, usually the 2324 becomes another set of resistance, and we just plowed right through that up above the 4031 here. That was the previous one. You can see we came up against it, reached all the way to just under 50 here, and then came back exactly to that same 4031 algo that we've had, and bounced off that a secondary time to be in the post market. So continuing that post market read, new highs. So everything's rosy. Just go with the flow. It's gonna mean revert here. We know we got positive extremes on that, so mark them, and be ready for them. As always, though, trade well. Have a good one.